What if the dream that built South Florida, the sun-drenched paradise, the palm-lined neighborhoods, the promise of effortless wealth, was never real? For years, the story of Florida has been sold as an anthem of endless growth, a refuge for the tired, the ambitious, and the hopeful, a place where hard work, a good mortgage, and a little luck could buy you a piece of the American dream. But today, in the heart of that dream, in Cape Coral, the illusion is cracking wide open. Once the poster child of post-pandemic prosperity, Cape Coral has now become the symbol of America's economic mirage, a city that rose too fast, borrowed too much, and believed too deeply in its own hype. Between 2020 and 2022, home prices here exploded, soaring nearly 75% in just 2 years. Builders couldn't keep up. Investors poured in. People called it the new frontier of opportunity. But every illusion eventually collides with reality. As of May 2025, the median home price in Cape Coral has fallen to $361,250, an 11% drop from its peak, the steepest decline of any major U.S. metro area. The same neighborhoods that once saw bidding wars now see for sale signs multiplying like weeds. Inventory is flooding the market. More than 3,000 active listings, 4 times what it was during the boom. This isn't just a correction, it's a reckoning. Because the story of Cape Coral isn't simply about one city's collapse. It's about what happens when an entire economy builds its foundation on confidence instead of stability. When people stop asking, "Can this last?" and start convincing themselves that it always will. In a way, Cape Coral is America in miniature, a sunlit version of a larger national illusion, one where debt, speculation, and denial have replaced discipline, production, and value. So how did Paradise become the epicenter of a housing crash? And what does it reveal about the illusion sustaining the world's largest economy? To answer that, we have to go back to the years when the boom began and the dream seemed unstoppable. It began with a migration, quiet at first, then unstoppable. Between 2020 and 2022, more than 40,000 people packed up their lives in the Northeast and Midwest and drove south to Lee County, Florida. To them, Cape Coral wasn't just a place on the map, it was a promise. Lower taxes, sunny skies, and, for many, the freedom to work from anywhere. Remote work had rewritten the rules. Consultants, analysts, designers, and digital marketers logged in from back patios instead of downtown offices. They looked around and saw cheap land, no income tax, and a vision of escape from the lockdowns and high costs of northern cities. The migration turned into a gold rush. By late 2021, open houses looked like auctions. Investors flew in from New York, Chicago, and even overseas, offering cash on the spot. In some months, nearly 38% of all transactions were all-cash deals. Builders couldn't pour concrete fast enough. Real estate agents called it the Florida miracle. But it wasn't a miracle. It was a mania. Nearly 1 in 3 homes was being bought by absentee owners or corporate investors. Hedge funds disguised as property groups snapped up entire subdivisions, counting on appreciation to do the work for them. Banks loosened lending rules, and new buyers stretched their budgets, borrowing 90% or more of their home's value. They all believed the same story, that Florida was immune to gravity, that prices only moved in one direction, up. By 2022, homes were selling for 70% above their long-term trend, a level national analysts quietly warned was unsustainable. But no one wanted to hear it. As long as the music played, as long as values rose, everyone kept dancing. Local politicians pointed to Cape Coral as proof of American resilience. Developers called it a once-in-a-generation transformation. But beneath the glossy headlines and drone-shot videos of waterfront mansions, something was already shifting. Because no market, not even Paradise, can defy basic math forever. The boom was built on borrowed time, borrowed money, and borrowed belief. And as interest rates began to rise and insurance costs skyrocketed, the foundations of Florida's housing miracle started to tremble. The first cracks appeared not with a crash, but with silence, open houses going empty, investors pulling back, and price-reduced signs quietly appearing where bidding wars once raged. That's how every illusion ends, not with an explosion, but with a slow realization that the dream isn't real anymore. And by 2024, that realization was everywhere in Cape Coral. The optimism that once filled coffee shops and real estate offices was gone, replaced by quiet hesitation. You could feel it in conversations at open houses, in the tone of local news anchors, even in the way for sale signs stayed planted a little too long. At first it was easy to ignore. Prices dipped a little. Agents said it was seasonal. Then listings began to pile up. First dozens, then hundreds, and finally thousands. By spring 2025, the numbers told the story no one wanted to face. Over 3,000 active listings, quadruple the amount from just a few years earlier. Homes that used to sell in a weekend now sat for 75 days or more. Sellers dropped prices again and again, sometimes twice in the same month, only to watch buyers disappear. Nearly 70% of sales closed below asking, and when the data hit the headlines, an 11% price drop, the sharpest decline in any major U.S. metro, it was official. The boom was over. But the truth is, the collapse didn't begin when the prices fell. It began when belief did. When families who once bragged about flipping their homes started whispering about holding on just long enough to break even. You see, every bubble is a story people tell themselves, a story about how this time is different. But in Cape Coral, that story unraveled fast, because beneath the palm trees and fresh paint, there was a much bigger problem. This wasn't a market built on need. It was built on speculation. And speculation is only sustainable as long as everyone keeps pretending. So when the pretending stopped, what came next was inevitable. The unraveling of America's most celebrated boomtown, and the uncomfortable truth about how fragile the country's so-called prosperity really is. But to understand why the collapse hit so hard, you have to look at how the illusion was built in the first place. Every great collapse begins with confidence, and Cape Coral had plenty of it. Between 2020 and 2022, people believed they had discovered a cheat code to the American dream. Buy anything, hold it for 6 months, and watch the price climb. The local headlines told the story. Florida home values defy gravity. Remote work revolution fuels Sunshine State boom. Banks and developers called it innovation, but underneath the optimism was pure speculation. Nearly half of all buyers during those 2 years borrowed at or above 90% loan to value. In plain terms, they were betting everything, sometimes on houses they had never even visited. Investors controlled nearly 1/3 of all home sales, many buying 3 or 4 properties at a time, convinced they could flip them before the market cooled. But here's what no one wanted to admit. When you build an economy on borrowed money and borrowed faith, the smallest change, a single interest rate hike, a single insurance bill, can send the whole structure shaking. That's exactly what happened. The Federal Reserve tightened rates, insurance premiums spiked, and just like that, the math broke. Families who stretched every dollar suddenly couldn't refinance. Investors who thought they could flip homes in a month were now stuck with properties no one wanted. The entire ecosystem, lenders, builders, buyers, realized at the same time that the boom wasn't real wealth, it was borrowed time. And when the time ran out, the illusion shattered. Now, the same builders who couldn't keep up with demand are sitting on nearly 1,000 unsold homes, offering $50,000 discounts just to move inventory. The once golden paradise turned into a desert of empty driveways and price cuts. But the real danger wasn't in the listings. It was in what came next. Because when confidence collapses, it doesn't stop at property lines. It spreads into banks, insurance, and entire state economies built on the promise that Florida would never fall. And that brings us to the next chapter of this unraveling, the insurance crisis that transformed a market slowdown into a full-blown economic reckoning. When the housing market caught its first chill, the insurance industry poured ice water over it. What began as a real estate correction quickly mutated into something far worse, an affordability crisis that no amount of sunshine could hide. Since Hurricane Ian, 6 major insurance carriers have gone under or pulled out of Florida entirely. The ones that stayed doubled, then tripled their premiums. Policies that once cost families $1,800 a year now exceed $6,000, if they can even get insured at all. For a state built on coastal living, this wasn't just an inconvenience. It was a death sentence for the market. Because when insurance costs climb faster than paychecks, buyers vanish. Home appraisers began slashing property values, forced to factor in the skyrocketing cost of coverage. Citizens' property insurance, the state's last resort insurer, ballooned overnight, now responsible for more than 65% of all policies in some of Florida's hardest-hit zip codes. Suddenly, homeowners weren't just battling interest rates or price declines, they were trapped in an equation where even staying insured meant losing money every month. It was a cruel twist. The very thing designed to protect property was now erasing its value. Developers stopped breaking ground, buyers backed out of contracts, and the phrase full flood risk began appearing not just in coastal reports but in bank memos and state policy meetings. But the most revealing part wasn't just the financial fallout. It was the realization that this collapse was self-made. A mix of deregulation, overconfidence, and political indifference had created a perfect storm. And as insurance carriers fled and premiums soared, Cape Coral's crisis stopped being local. It became a warning to the entire state, a reminder that what falls in one Florida city doesn't stay there for long, because the next dominoes were already tipping in Miami, Palm Beach, and beyond. As the numbers worsened, city halls and state offices scrambled to look like they were doing something, anything. But by the time the politicians reacted, the damage was already spreading faster than they could legislate. In March 2024, Cape Coral officials did the unthinkable. They froze all new building permits. Not because the city ran out of space, but because drainage, flood risk, and uninsurable construction had spiraled out of control. Developers were furious, investors panicked, and thousands of projects were suddenly put on hold. To make matters worse, when the freeze lifted, new rules came crashing in. Every renovation over $25,000 now required third-party engineering certification, and the city's code enforcement unit became one of the strictest in all of Florida. It was branded as a reset for market safety, but in reality, it was a forced reckoning. The message was clear. The era of easy growth was over. Yet the policy crackdown didn't calm the chaos. It amplified it. Construction companies laid off workers, builders stopped advertising, and Cape Coral's identity as the Sunbelt's hottest housing boomtown turned into a case study in how optimism curdles into oversight failure. Meanwhile, political leaders tried to spin the crisis. They called it a correction, not a collapse. But when home inventories quadruple, insurance rates triple, and entire development zones stall, that's not a correction. That's an implosion wrapped in denial. And while Cape Coral's politicians pointed fingers, neighboring counties were taking notes, because what happened in Cape Coral wasn't just a city's mistake. It was the blueprint of what could happen anywhere growth was built faster than truth, which brings us to the next part of the story, how the tremors from one Florida town started shaking the entire South. Cape Coral's collapse didn't stay contained. It spread like a financial contagion carried by insurance premiums, bank memos, and buyer fear. Within months, the tremors reached Miami-Dade, Broward, and Palm Beach, forcing officials across South Florida to rethink what growth really meant. Broward and Palm Beach counties, long seen as safe havens for coastal luxury, began tightening floodplain ordinances, requiring 2-foot elevation buffers and mandatory flood insurance disclosures for new buyers. The message was subtle but unmistakable. If you want to build here, you'd better be ready for higher costs. Banks, too, changed their tone. Quietly, lenders raised down payment requirements by 5% to 10% for any property flagged as flood-prone. It wasn't politics, it was self-preservation. No bank wanted to be left holding the bag when the next wave of defaults hit. Reinsurers, the global giants that back Florida's insurance system, took Cape Coral's implosion as a warning. They hiked their own rates by 30% to 35% for 2026 contracts, citing unmanageable systemic risk. For regular homeowners, that translated into one more brutal truth. The cost of living in paradise was about to skyrocket again. And so the collapse that began in a single Gulf Coast city became a regional reckoning. Developers who once bragged about unstoppable demand were now sitting in boardrooms discussing absorption slowdowns. Miami's condo market, the jewel of Florida's skyline, began to feel the chill. Across the Sun Belt, analysts started using a new phrase to describe Florida's predicament: the Cape Coral effect. It became shorthand for what happens when speculation, deregulation, and climate denial collide. Because the story was no longer just about Florida homes. It was about America's broader illusion, the belief that growth itself can outpace reality forever. And that's where the narrative shifts, from local failure to national warning. Because Cape Coral's story isn't just about housing, it's about the American economy's addiction to illusion. Every empire has its myth. For the United States, that myth has always been endless growth, the conviction that prices rise, markets rebound, and the future always belongs to those who just keep buying. But Cape Coral shattered that illusion. For decades, America built its prosperity on borrowed money and borrowed optimism. Credit cards, student loans, subprime mortgages, trillion-dollar deficits, all wrapped in the promise that next year would be better. But what happens when next year stops coming? The Florida housing collapse isn't just a local misfortune, it's a mirror held up to a national delusion. Families who thought they were securing their future by buying into the dream are now trapped in negative equity. Investors who called themselves visionaries are liquidating at a loss. And retirees who fled northern winters for a safe nest egg in the sun are discovering that paradise can go bankrupt too. Every major metric that once signaled confidence now tells a darker story. Inflation remains sticky, wages stagnate, and insurance costs eat entire paychecks. The same pattern that broke Cape Coral's housing market, over-leverage, under-regulation, and blind faith in tomorrow, is quietly repeating itself in other sectors. Credit cards, auto loans, even federal debt. Because what collapsed in South Florida wasn't just real estate, it was belief. Belief that the system would self-correct, that the Fed could always bail us out, that no matter how irrational the numbers looked, they'd keep going up. And that's why Cape Coral matters. It's the warning flare for the entire American model. A reminder that when you build a society on speculation and denial, it only takes one spark or one hurricane to expose how fragile the foundation really is. But here's the uncomfortable truth. This story isn't over. The same forces that inflated Cape Coral's bubble, easy credit, speculative migration, political complacency, still drive much of America's economy. And the next collapse may not come from a flood zone. It might come from Wall Street, Washington, or your own neighborhood. Because when illusions die, reality doesn't arrive gently. It hits all at once. What's happening in Cape Coral is not just a market correction. It's a preview of the reckoning America has spent years trying to avoid. The story of a single city's housing collapse reveals how fragile the entire economic structure has become when fantasy replaces fundamentals. As Cape Coral's homes sit unsold and insurance rates skyrocket, a deeper truth emerges. The American economy is no longer built to withstand reality. It's built to sustain appearances. Politicians celebrate growth without mentioning that it's financed by debt. Developers chase demand that doesn't exist. And families, desperate to keep up, borrow to survive. Across South Florida, thousands now live with the quiet dread of knowing that their biggest investment, their home, could soon become their biggest liability. And while officials offer talking points about resilience and adjustment periods, banks are quietly bracing for defaults. Builders are halting new projects. And ordinary people are realizing that the so-called Florida dream has turned into a trap. But perhaps the most sobering part is what it says about the national mindset. Because this isn't just Florida's failure, it's America's reflection. Cape Coral is a microcosm of what happens when optimism is weaponized and risk is ignored. The illusion of control, the belief that markets always recover, that insurance will always pay, that someone else will fix it. These aren't just local delusions. They are cultural ones. And just as Florida's boom ended in silence, listings piling up, lights flickering off, developers vanishing overnight, America's larger reckoning may not come with an explosion. It will come quietly, through shrinking pensions, inflated grocery bills, and homes worth less than their mortgages. Through people realizing far too late that the system they trusted was never designed to protect them. Cape Coral may be the first domino, but unless something changes, unless leadership starts telling the truth instead of selling comfort, it won't be the last. Because what collapsed in South Florida wasn't just a market, it was the myth of invincibility, the comforting illusion that America's prosperity could never fall as hard as its housing prices. So here we are, a city built on sunshine, now shadowed by for sale signs and half-finished dreams. Cape Coral began as a symbol of hope, a place where Americans could still chase the promise of security and success. But it has ended as something else entirely, a cautionary tale for an entire nation addicted to denial. Look closely, and you'll see that this collapse isn't just about houses. It's about how we measure value itself. For years, growth was treated like a law of nature, something that could never be interrupted. But nature, as Florida has learned again and again, always reminds us who's in charge. The builders have gone quiet, the investors have retreated, the families who once believed they were securing their futures now whisper about selling before prices fall further. And yet beneath the despair, there's something else. A rare and painful clarity, because when the illusion finally breaks, honesty becomes possible. Honesty about the fact that an economy can't run forever on speculation, that wealth built on leverage, not labor, is fragile, and that leadership obsessed with growth at any cost will eventually face a cost too high to pay. Cape Coral is more than a story of collapsing home prices or abandoned construction sites. It's a symbol of what happens when a country believes its own myth for too long, when optimism turns into blindness, when pride turns into policy. So the real question now isn't what happens to Florida's housing market. It's what happens to the rest of America when the next illusion cracks. Because what's unfolding in South Florida isn't just a local collapse. It's the beginning of a national reckoning, one that's forcing every American to ask the question our leaders refuse to face. What happens when the dream finally runs out?